we have a very exciting venture and the management of it joining us right now. LetsVenture is the company that I'm talking about, and I have the management, Shanti Mohan, from the company, who's joining us on the show today. Hi, Shanti. Good evening. Thank you so much for joining us. Let's talk a bit about how 2019 transpired for you. In fact, for the entire startup universe, 2019 has been a phenomenal year. How would you describe the year for early stage startups and anything which stood out distinctively for you?
Actually, 2000. So just to kind of give a quick background on LetsVenture for the viewers who don't know us, we are basically a marketplace and we connect startups to investors. We were founded in 2013, and over the last 7 years, we've helped 195 companies raise 100 million on the platform. Our portfolio today is valued at 1.07 billion. So that's the big kind of number for us in 2019. But I think what we have seen over the last year is that angel investing is becoming more mainstream. And when I say mainstream, we had about 1,500 new investors who joined our platform this year, and out of which about 30% were from outside India, and about 23% were from outside the major cities of Bangalore, Bombay, and Delhi. So really seeing a lot more investor interest into the early stage ecosystem. And we would attribute it more to a couple of kind of factors which we have seen in the space. One is that with the SEBI registered, the angel AIF coming into play, this allows an angel investor to now invest small amounts of capital, and it actually goes as one entity onto the cap table, simplifying the process of investing both for founders and for investors. So that is probably the highlight of 2019. And today we have about close to 500 investors who have signed the contribution agreements on the AIF, and we have been deploying very actively through that. So that is one trend. The second is that syndicates, which was kind of coming up in 2017-18 for us. In 2019, we saw syndicates going mainstream. So today we have about 22 syndicates on the platform. And when I say syndicates, is basically it is a launch pad for marquee investors who are now looking to somewhere formalize their investments, and they can also get backup pool committing to their own syndicate. So really kind of seeing that going mainstream. So from the early stage investing perspective, I think things have become much more mature in the Indian ecosystem. Now, talking from the founder perspective, we are again seeing very good, mature founders starting to emerge and starting to start up companies in India. And from the founder perspective, again, people who have about 5 to 10 years experience, putting in their first check, putting in the initial capital, really understanding the larger market problems they are trying to solve. So really seeing the entrepreneurial ecosystem becoming a lot more mature.
Shanti, 2019 has been a pivotal year for LetsVenture as well. Your portfolio hit $1 billion valuation, in terms of creating that you've created for your investors. Can you tell us on your platform particularly, what are some key trends that have emerged?
Mentioned earlier, I think the key trends have been about a lot more understanding of the angel investing process, and really we have over the last 6-7 years we had seen 4 different kind of profiles of investors who were investing online. One was the entrepreneur turned investor, one was the second generation family business, CXOs of large companies, and the global Indian. I think the interesting point or the interesting trend we saw in 2019 was a fifth category emerged, which were the CXOs at startups themselves, right? And this has happened because the startup ecosystem has seen large amounts of secondaries happening last year, where a lot more employees were able to encash their wealth, right? So really seeing that stock options and employee options and secondaries in the ecosystem starting to play out, which has actually now bought back capital into the ecosystem. So from the highlight of 2019, I think it is the smart capital, entry of smart capital into the ecosystem, coupled by the access they today get, right? So as a founder, if you're trying to raise funding, you have the obvious choices of all the large VCs and the micro funds. I think entrepreneurs also want to raise money from people who have already been in the ecosystem because they understand that ecosystem better. There is a lot more empathy, there is a lot more engagement, there is a lot more support founders get from people who have already been in the same space, right? So really the entry of smart capital coupled with access to growth deals coming onto the platform. So if you have looked at the trends in earlier in 2000, 14 to about 18, the early stage ecosystem was the only place where angel investors could typically get access. I think what we saw in 2018-19 was angel investors and smart capital getting access into growth deals, which really kind of talks about how the angel investing ecosystem is also maturing in India today.
You've helped over 200 odd startups raise funding on your platform. Can you tell us which are the hot sectors and what is that investors want to increasingly bet on? What are the kind of businesses that they are attracted to?
Uh, so, you know, uh, so the sectors which saw the highest investment on the platform, as well as what we have kind of seen as a trend in terms of entrepreneurs creating, was more about healthcare. We saw F&B, right? And when I say healthcare, it is not just health tech companies, right? It is AI application to healthcare. So really looking at deeper verticals in healthcare like cancer treatment, pancreatic treatment, a lot of real deep verticals in terms of healthcare startups, right? We also saw some fintech startups come up. Of course, fintech has not been as much the hot trend last year. So that has been, so we're seeing very different applications kind of emerge around F&B, consumer trends, consumer startups, right? And fintech. Then there was, of course, the favorites of consumer brands were quite a favorite last year. So those were the trends we noticed.
For someone who's been very active in the early stage, what advice would you like to give those kind of entrepreneurs or people who are just starting out with their ventures? The starting years are the most difficult. So, what are the do's and don'ts for budding entrepreneurs, according to you?
Really, the initial years for a founder, I mean, though we are a funding platform and we help a lot of entrepreneurs raise funding, I think my advice has always been don't make capital or fundraise the reason why you became an entrepreneur. I think it has been over. We have kind of given it more importance than it needs in the journey of an entrepreneur. I think there is a very high need for the entrepreneurs to understand the space they are building the product in, to understand the problem they're solving, and to really ask the question on why did they become an entrepreneur, right? So really going back to basics of starting a company and not make fundraising the goal of actually starting up. So that is one first very important advice, because customer money is always cheaper than equity, right? So really it is important to see what is the validation, what is the monetization opportunities which the startup has before you go and become a founder. Second is, of course, once that you've decided to become a founder, I think it's important to have your governance and your basic processes in place. So we see a lot of founders not understanding founder agreements, advisory agreements. They give away too much for too little, right? So really looking at investor founder roles, which are not very helpful for the founder as well as for the company going forward. So really think through if you want to make it $1 billion business. So really need to lay the foundations very strong, just in terms of understanding equity distribution over the numerous fundraising cycles you will go through as an entrepreneur, as well as understand that you all need a founders agreement, you need the processes in place. And here I'm not talking about heavy processes, right? But just have have a basic framework in place. We've also seen a lot of large companies, when they come to like 3 4 years, they don't have good accounting practices in place, and then putting the accounting practices becomes a lot more costlier when you start to fundraise from external investors. So really kind of those, and of course the basics of entrepreneurship, right? Like you should understand the sector you are kind of investing the next 5 years of your life into, and really understand the competition, understand how the market is solving the problem today, understand if the market is really big enough for you to uh, build a large company. And I believe there's nothing wrong in aspiring to build a small venture if you really want to stay small. So there is no right or wrong when it comes to entrepreneurship. I think it is just about being aware of the choices you have when you start up a company.
Just as an extension of this question, I want to know, for people who are starting out with their ventures, what makes a pitch perfect? I mean, what is it that investors are looking for beyond that pitch deck? What is the kind of what is it more than that they're looking for?
I think what makes a pitch perfect is the genuineness of the pitch, right? I think people overrate PowerPoint presentations and they overrate communication. As an investor myself, I always like to understand why the founder started the company and what is going to keep him motivated for the next 5 years, right? Because you are 5 or 10 years, right? Because you're actually giving up a lot of good opportunities to start a venture on your own. And do you believe in this long enough, and do you believe in this deep enough to stay vested in this for the next 5 to 10 years of your life? And will you give it your 120%? And I think that conversation it can never be perfected through a pitch, right? It will always come up with your deeper understanding of the space you're building the product in, and with the belief that you will be the one who will be successful, and you will be the one who will be the best in the next 2 to 3 years, in spite of competition being in the market, right? So I think that is what goes beyond the pitch, the passion of the entrepreneur, his genuine understanding of the space, and his deep faith in himself and his ability to deliver the bigger outcome in the space.
About valuations, how are you reading into the current level of valuation for these startups, especially in the early stage? Will we see a lot of companies correct their valuations going ahead? Is that something that you expect this year?
So early stage valuations have not been impacted largely because I think the early stage works very differently, right? So the early, so actually, let me kind of take a step back and not make a statement on the valuation, because I think a valuation is a very different. I mean, valuation has to be understood in the context of your business, in the sector, the number of companies who've already raised money in that sector, right? What is the potential of that sector to deliver like 100x return to investors in the next 4 to 5 to 10 years, right? So, valuation is probably a number which is a cumulative of a lot of other things which happens around that company. But having said that, right, early stage valuations in India are still very at a very they are at the right price point, I would say, right? Because having a very high entry point for investors is not healthy for the ecosystem, because then it becomes very hard for those investors to exit from the ventures, right? So really, today we have not seen very crazy high valuations. Of course, a second time entrepreneur who's already proven himself, who's already kind of given an exit to his earlier investors, who's already proved that he understands the mechanics of building a business in India. I think they would command a very different valuation. But those are aberrations, right? And they are more exceptions to the rule. But as a general rule of the thumb, we have not seen valuations going high or low based on what the macro numbers are telling us today. Because early stage is really different from different from the very growth stage investments which happen in India. they are still about 2 to 3 years before a company would go and raise like a 5 to 10 million.
Uh, Great chatting with you and getting in your perspective as well, especially for all the budding entrepreneurs who are watching the show at this moment. Thank you so much once again for joining us.